Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys we will take a look at the Japanese yen because right now the yen has reached such level where it becomes particularly interesting. And if you will take a look at our recent analysis on the euro currency, on the Great British Pound, you now could see that it's nothing, no surprises there. So the situation is developing in general in agreement with our thoughts, in agreement with the situation that we have discussed in our weekly research. And also guys, on example of the euro currency, you could see how useful sometimes is to apply the analysis of the fellow currencies such as the Swiss franc, because the core of our trading plan for euro currency was the stop grabber that we have found on the Swiss franc, and that led us to assume that euro currency should show downward continuation, and probably hardly will show any significant retracement up till it will reach the significant support around 135 area that we have discussed. So currently I do not see any necessity to add something more on our previous analysis. So if you trade the euro currency according to our trading plan, you could continue to do this. Besides, as you know, yesterday the German inflation was really poor, and that increases the pressure on the European Central Bank on it, and increase the chances that on the soon meeting on Thursday, it's really a solid probability that Mario Draghi will announce the easing policy on the euro currency, and even could drop rate on the euro currency. At the same time, the data from the United States has shown nice improvement, and particularly this moment has impacted on the Asian markets, and that's why I today have decided to switch to the Japanese yen, because as I said, market right now stands at the hard point, and this really could become the moment where the Japanese yen could start the fast action. But first, I would like to remind you the core of our analysis that we have prepared previously, and that's why today we will start from the monthly time frame chart. Recall that 4 months later we have discussed appearing of this bullish stop grabber. Then for a long time we didn't deal with the Japanese yen because it was in a tight range, and it was really not very interesting and not very impressive action. That's why we have switched to other currencies. But right now, take a look what has happened. Market has formed a stop grabber for the whole 4 months. After that, market wasn't able to take out of this loss, so this grabber is still valid. And take a look what has happened. Shift has trended bearish, but price action stands flat. That could be the sign that market could show the appreciation to the upside. And that's why right now, especially based on the pattern that I have found on the daily time frame chart, I have decided to switch to the Japanese yen. So keep in mind this picture, because that is really big picture that in fact the foundation for the whole further action on the Japanese yen. And particularly interesting why I said that Japanese yen stands at the hard point, because market is forming the pattern and still right now stands very close to the invalidation point, and invalidation point stands at this low. That's why currently euro currency stands at the Japanese yen stands at the situation that's in general very attractive for the taking position with a relatively small risk compared to the profit that you could get. So risk reward ratio right now is very significant. Something has happened with my internet connection, but let's continue. So on the daily time frame chart, here is the pattern that I'm talking about. That is the huge butterfly cell that is forming, and that is corresponds with the target of the stop grabber. That is in fact, guys, invalidation point of our stop grabber. What we see here, take a look that this low stands higher than this one, and this means that this pattern is valid, the butterfly is valid. This means that the stop grabber is valid, and the target of the stop grabber stands above this high. So as the target of this pattern, market should move above this top. And that's very typical for the butterfly, since usually butterfly moves to the extension of the initial swing. The extension stands at 127, it's right here, 106.60 approximately. That's the target of the butterfly. What else do we see here? Nicely looking bullish divergence with the MACD indicator. Trend has shifted bullish, but it's not the same as here, because right here market has confirmed this bottom, and that's why this moment is very important for perspective of the Japanese yen. Third moment, finally, take a look. Market has accelerated out from June pivot point. That's the monthly pivot point, guys. And yesterday market has accelerated right above it. It's a really fast acceleration was to the upside. That tells me that right now the sentiment on the Japanese yen gradually is shifting to the bullish side, and I think that right now we could try to bet on a possible upward position. So at least currently it accompanied with the relatively not significant risk, because invalidation point stands right here, but profit stands right here. So risk reward ratio tremendous on the Japanese yen, and situation now is changing, and currently we could probably suggest that right now is the initial moment of sentiment shifting. Now let's shift to the 4-hour time frame chart. On the 4-hour time frame chart, we will try to apply the Jet Napoli Minesweeper B tactic for taking the position in advantage of the possible bullish action. So the Minesweeper suggests, so we can see market has shown first action to the upside, retracement, that's the second leg. The Minesweeper B suggests that we should take the position right at the confluence support, this 101.82, 101.84 area. That is also, guys, the weekly pivot point. So that would be perfect if market, for example, will reach this confluence support, test the weekly pivot point, and turn to the upside. The weekly pivot point hasn't been tested yet. Okay, and I think that market really could reach that scenario to watch for a potential long entry. The stop probably could be placed somewhere below this area. This will be weekly pivot support 1, and the sixth one is support 101.45. Although our major invalidation point stands right here, but if market will not able to hold above this area, it simultaneously will move below the monthly pivot point, and that will be the solid challenge on the bearish strength. So this will put under question our trading plan if market will not able to hold even at this area, because that's really strong support. If market will pass through it, that will be not very typical for the market, that shifting the sentiment to the bullish side. And if market is really bullish, it should hold here. The one moment is that really possible is that, take a look, that market hasn't quite completed the ABCD pattern. So if you take a look at A, B, C bottom, then D point, the object point of this ABCD, will stand right at the monthly pivot resistance 1 and very close to the daily overbought. So I can't exclude that maybe market will proceed slightly high when it hit the monthly pivot resistance 1, and then will show the significant retracement. But I can't say it definitely right now, because market could show the retracement here as well. And if you take a look at the hourly time frame chart, you'll see that market has formed a double ripple sell pattern, now is developing to the downside. The target of the double ripple, usual target, is 101.98, so that is the 50% support of the double ripple thrust, and that suggests appearing of the deep retracement. 101.98 is very close to our 101.82 area. So if market will reach this area, it probably will continue to the weekly pivot point, because market has the tendency to test it. Well, if this will not happen, and market will turn to the upside, then next level where retracement could start will be this area. It's around monthly pivot resistance 1. That is the big trading plan on the daily time frame chart. For scalpers, guys, here is also something to trade. Take a look that here we could get the butterfly buy. So if market will not reach this area, but it could form the butterfly buy on the forward time frame chart. Sorry, butterfly, bread and butter. So sure, bread and butter buy, because that's not bad for us. 1, 2, 3, 4, 5, 6, 7, 8. Approximately 8, 9 bars to the upside is acceptable for the thrust. If market will reach this area with the first retracement, that could be the object and the context for the scalp buy opportunity with the target 618 resistance of this move down. That is the scalp trade. It's not suitable for everybody. Our major concern, our major plan stands here with this butterfly, of course, and with the retracement. But if you're a scalp trader, you trade on the intraday charts, why not? You could track this possible bread and butter buy as well. So you can see the Japanese yen right now stands in very thrilling moment that has in fact a huge potential, huge opportunity for trading. Simultaneously, Japanese yen shows and gives us the scalp context for trading. For example, this bread and butter opportunity. So it's really right now is very interesting and fascinating situation, and I think that we should keep an eye on it. Depending on how it will develop, we will dedicate some more updates to the Japanese yen, but also we will not abandon our favorite euro currency and Great British Pound. So let's see what will happen.